Welcome to Monday. A bit of a quiet week, to be honest. At the end of the week, stocks came off their highs. Nasdaq had a bit of a meltdown. We saw US dollar starting to retrace and backfill that move from a while back, and yen was probably the most interesting one on Friday, as the BOJ, not officially, it was a leak, that the BOJ will not be defending the yield curve in their meeting this week, and so that saw the yen weaken considerably, as you can see in this move here on Friday afternoon. So biggest things we're looking for is the move, or the news this week, right? We've got a lot of heavy data. PMIs, I'm not too interested in those. Well, not interested, I am interested in the outcome, but they don't have too much volatility because they're only a survey, it's what they call soft data. It is literally just a survey of expectations, so it's not hard data, which is obviously the actual manufacturing results and service results. So I guess we've got consumer confidence that can, if it's a big miss, but obviously Aussie inflation is a big one, and then the massive one, which is Thursday, brings FOMC and the ECB, and later on the US GDP, but it's the FOMC. It's a big one, and it's around an 80% chance that you'll get a rate rise, and so everybody will be sitting on and waiting for that. And then on Friday we've got the BOJ PCE price index, but that's after the FOMC, so might see some inflation on that, might see some volatility on that depending on what happens in the press conference on Thursday. So with the market pricing in a quarter basis point move, it'll all be about what Jerome Powell says in the conference. Are they reaching the peak of rates? Where do they expect the next move to be? Is it going to be staying at 5.5 for 6 to 12 months? Is it going to be following what the market pricing is, which is a rate cut in January? So that'll be the interesting point to monitor on Thursday morning. Looking at the technicals for the majors, we can see the Aussies just stuck in this range. Off these round numbers, you got 69, 68, 67, 66, 65, and it's just bouncing around in between it. There's no real driving factor for the Aussie, and I don't see it really changing out of that range anytime soon. Euro dollar has come back to a support level, and is looking like it might bounce from here, but I guess it's where the FOMC will go, but that's 3 or 4 trading sessions away. I don't see it making new highs before FOMC. More than likely it'll come back and have a look at this level here up until FOMC, and from there will be where do we go to, and that'll be based on what Jerome says, right? So I'd be looking for it to come back down to that around the 110 figure over the next couple of sessions. And the pound, it too is on a support level, but excuse me, I also think that might be looking at that sort of level over the next couple of sessions. And then the dollar yen bounced nicely off that, and looks like it's heading back to 145 with the way the BOJ is handling things. It can move real quick, that one. Probably starting to get too far gone. Yeah, we can see there's a little level in there which might stop its run for a short period of time. So that's 142. And just have a quick look at commodities and see nowhere having come off the peak. Copper's just tracking sideways, gold off a little, oil up a little, nothing too serious there, or and nothing too positive for the Aussie to grab onto either. So, and finishing up on bonds. Oh, shouldn't do that. Go back here, bonds. Short end sideways at the end of the week, but back up to 4.85 as you would expect with the FOMC expecting to raise rates. But we want to see the long end pushing above 4. If that doesn't happen, then maybe the rate cut will occur in January. So keep an eye on that one. Other than that, guys, happy trading. I think it'll be a pretty quiet session to start the week. We've got all these PMIs in Europe this afternoon, but as I said, they usually don't bring much volatility. It's just more of a curiosity. And on that note, I shall see you tomorrow. Stay safe, trade accordingly.